Hi everyone, welcome back to Be Rich. Yes, Sashwath is back with me. So he actually was visiting Chennai and I pulled him in and told him he has to record some videos with me. So he's obliged. Hey Shashwath,
Yeah.
what do you have for us?
An interesting topic,
Hmm.
definitely. I hope you guys, I keep saying this for everything I bring. So I hope you guys do find what I find
Well,
interesting.
you definitely can't say this is a boring topic. I hope you don't watch the video.
No,
That's like something I would do.
no, maybe interesting for me, but maybe boring for the audience.
Yeah.
But I hope that you guys find this interesting.
Hmm.
But before we get to the topic, I want to talk about this book, which I recently got after a recommendation from one of my professors. And this book is called The Evolution of Cooperation. It's by Robert Axelrod. And it's supposed to be a really good book to understand the concept of game theory in economics. And in a very short way, game theory is basically seeing how it's not about games. It can be about games, but it's also about how decisions are made, how two people interact given they know some information, I know some information. So suppose both of us were in a negotiation, it's looking at how we would make our decisions based on incomplete information. And this is generally a very nebulous and obtuse sort of topic, but this is a book which I think talks about it in a more layman's way of looking at it, and that's why I've gotten it. I haven't gone through it yet. I just got the delivery, but I figured that every video I'd bring up some book which I've recently bought or it's in my library which I want to share with you guys on the video because that seems to be a very popular thing. That being said, the topic for today is this stock known as Bit Brother. So Bit Brother is a penny stock in the US, and well, it's not a penny stock anymore because they did a reverse stock split or a stock joining where they basically took some stocks out of the market and like combined them together. So a 25 to 1 in the sense that every 25 stocks becomes one stock. So they were extinguishing a few of the stocks pretty much. And this is something Bit Brother has been doing. And the question which a lot of people ask him and something which I've been asked is, aren't penny stocks a great sort of avenue to invest in? Because it's a very small amount of money which is parked in each stock. And if the stock moves by, let's say, even 20 paisa, then you'll see almost a 30-40% return on your equity. That's the logic. Well, we're here to basically clarify that and explain to you why penny stocks may not be the panacea which you're looking for or the silver bullet which you think is perfect for making phenomenal returns in investing. This is akin to the numerator denominator problem, where a penny stock may be extremely small in its price, but the point is that there is a huge amount of shares going around, which means that even if you sold, let's say 100,000 shares of the stock, it's not enough to move the stock price per se.
No.
And this company, Bit Brother, beat even Tesla to be the highest traded stock in the US stock market by volume. And its stock price is around $1, which is pretty much in the penny stock range because they did a reverse merger. And they traded about 900 million stocks in about a month. And that's the kind of trading which goes on in terms of volume. And what this means for you is that even if you purchase, let's say, 100,000 of these stocks and you were to dump them in the market in a single day, it's not enough to make much of a market impact on the price because your trading volume is determined by the amount of outstanding shares in the market. So, that being said, the volumes will adjust for that. Even if imperfectly, they will adjust for that huge number in trading in outstanding stock. And the story of Bit Brother is interesting because this is a company which was actually a tea company called Urban Tea, which then got into blockchain. So, and then it became a meme stock like GameStop in the US, and it was being pushed up and up and up. And this entity called Funware ended up pushing Bit Brother up as well. And the idea with penny stocks in the US is that the question is, how low can it go? It's already a penny stock. It can't go much lower than that. That's false. There have been many cases of penny stocks being kicked out of the market because their prices, they've been trading under $1 for too long. The New York Stock Exchange particularly is quite strict on not tolerating stocks which trade below a dollar of, money. And the Nasdaq is a little more tolerant, which is why you'll see the amount of penny stocks in the Nasdaq index much more than you will see in the New York Stock Exchange. And that is something which you might have noticed. And also, an interesting thing is in the past year, penny stocks have risen to 517 companies instead of 77 the year before. So that is quite interesting, where you see that a lot of companies are actually slid in price in the US, and they've come to this penny stock range, which I think can be looked at as pressure in the fault lines in the margins. So you sort of see these cracks in the US growth story, maybe not appearing. These are sort of wrinkles on an otherwise okay face. And these are signs which may be interesting to sort of look at and figure out whether if the macroeconomic policies in the US are working for the benefit of the economy, and two, is a recession inbound? These are also questions which we can sort of address with the phenomenon of Bit Brother in the US. What do you think about that?
I think the reason why people like flirting with penny stocks is because, one, they don't know what they're doing. They want to make quick money. They're having severe FOMO. They're seeing a lot of people talking about stock market, making investment, making huge returns. So they all want to venture into the stock market, but they're scared to place money on the table. So they feel by looking at a penny stock, okay, I'm placing something so small. If I lose it, I don't care. That is one mentality. The second one is people who believe stock market as something separate from the business, meaning you're not looking at the owner, you're not looking at the business model. You think all that is rubbish. You're just trying to ride the seesaw of the stock market, which it does seesaw. You don't care why it's seesawing. You know that it's seesawing. Like surf, you don't care why waves are formed. You're like, who cares? As long as I can ride the wave like a surfer, I'm a happy man. So that is the idea. And that is where what Sashwath said comes into play, which is trade volume. What happens with trade volume in a penny stock is you kind of try and anticipate the next wave. Let's say you see a penny stock. You pull out the trade volume data over the last 1 year, and you try to see patterns in this trade volume and try to correlate some kind of reasoning behind it. And one beautiful thing about the human mind is when you want something, you'll do it, then you'll justify it with logic. People who invest in penny stock tend to do this. They want the money. They'll want to invest it. They'll invest it. Then they'll justify it through some convoluted logic, which is like backhand doing, It's like trying to create a question that gives the answer which you want. It's like really weird. It's a real strange thing. But human beings are prone to doing this.
Yeah, you decide on an answer, then figure out.
Yes, so then you give yourself that question which will match that answer.
Yeah.
And the problem is, most of us viewers, and me and Sashwath, we are very small investors. And we do not have any great insight into the market other than what is shared with everybody. So we cannot do anything other than what the market news knows. So that means we don't have any special news. So if anyone is trying to give you a special news and trying to influence you into a penny stock, you are getting sucked into something known as a pump and dump. Most penny stock operators will have boiler rooms. And if you've seen any of these movies about stock markets, you'll know. They'll have them operating, and you'll keep on getting calls. Like all of us get these calls saying, are you doing trading? I see you have a account. Would you like to do some trading with us? And that means they're seeing if you're a lamb soft enough for slaughtering. And if you say yes, they'll say, sir, we'll convert 10,000 rupees into 1 lakh for you in 3 days. Or something, some crazy nonsense like this. And if you buy it and say, okay, what do I do? He'll say, sir, you buy these 3 shares of what we are recommending. You don't have to buy from us, sir. You just go buy in the market. If you already have an app, you buy there. And you're like, okay. Like this, they'll slowly increase trade volumes on a stock. A lot of social media influencers do this also, pushing up stocks like this. And penny stocks are the easiest to push because the price is so low and the volatility of the stock is completely based on trade volume. So suddenly there's a spike in trade volume, it will push the price, the algorithm will push the price up. Because in stock market, price discovery is through trade. So the market sets the price means what? It is a volume of trade which is happening, which the computers use to set the price for the stock. If everybody is ready to pay so much for a stock, the price will immediately go towards that region. If everybody wants to sell a stock and they're willing to compromise on the price, they'll start dropping the price, trying to match whomever is the best match. That's all the computer does. So that's why trade volumes play a big role. And that's what Sashwath was saying in a very nice way.